In 1870.
You're the wild, the wave, the crowd. You reach the sky so wide, you have the future caught on. Let's know what the hell were you thinking? Your life is beyond, keeps the daylight blinking. Every day's a Christmas. Dream never dies. Retired, you say, with a wink and a grin, but the podcast is rolling, pulling us in. Your compass is love, with your kisses, your guide. Shining seas line, with vision and pride.
Got my glasses.
Dreamer who lights up the dark. You reach the sky for one day, and you have the future caught on always. Let's know what the hell were you thinking? Your life is beyond, keeps the daylight blinking. Every day's a Christmas on the skies, with James and the stars. The dream never dies. Turn our lights to flying high. You kiss the stars, but never say goodbye. Fly, can pull you down. You're the wild, the wave, the crowd.
All right, enough of that. My goodness. Good evening, everybody. What are we doing? No, I don't want that. I want to take this, put this all the way over there. I need my calculator. Gotta take this down to there. Calculator, where are you? There it is. There it is. And I believe that's it. We're ready to roll. Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. What I'm looking for is very specific, simple, safe, predictable, consistent, 1% per week. Now, I use a trading strategy I created for my 9-year-old daughter. It was simple, safe. I got 5 simple rules. Rule number 1, never ever buy anything you do not understand or you do not want to hold on to for the rest of your life. That's it. You don't understand it? Don't buy it. You don't like what they're doing? Don't buy it. You don't know anything about it? Don't buy it. Simple. You don't understand the company, you don't know the numbers, you don't know what's going on, don't buy it. That's rule number 1. Rule number 2, never sell at a loss. It defeats the purpose of the game. And do not kid yourself, this is a game. It's an adult game with adult consequences. That means you can and you probably will lose money at some point. I have found that most people lose money by hitting the wrong button. I'm guilty of it. I do it every single year. Every single year I've hit the button at least once or twice incorrectly and lost money. It happens. Nobody's perfect. Thank you there, sweet Dan. All right, so rule number 3. This one always boggles my mind because a lot of people don't pay attention to it. Rule number 3 is simple. Rule number 3 is just make sure the company is consistently profitable. That's it. Just make sure the company is consistently profit. That's rule number 3. Rule number 4 is weekly options only. The name of the show is simple. Dividend investing for weekly cash flow. That means we need something that trades on a weekly basis, weekly options, and we need something that we're going to invest in, dividend stocks. Well, because dividend stocks consistently increase their profits and consistently share their profits with me and you. Okay. Rule number 5 is make sure all the numbers work. Now, we're going to look at each and every one of those rules as the night progresses, and everything's going to come together like a good movie. All right? Mike, nice to see you again. What's up, Chuck? Yo, I'm here for your daughter, Chuck. Anyway, let's get the ball rolling. You guys are going to give me stocks that you look like. Every night we look for 5 quality companies. And the rules are pretty simple. I muted Forex. Thank you. I don't need anything about Forex. Thank you there, Den. All right, so let's get the ball rolling. You guys going to offer me some stocks to take a look at. I'm going to throw them in, see what they look like, see if they fit. But always keep in mind in the back of your head, I'm different than you. I'm 62. I'm retired. I have no desire to go back to work. That's it. No desire to go back to work. Okay? I've done 50 years, 5 decades. I think I'm entitled to retire. That being said, all the money, Goldman Sachs has a poor man's covered call. Sam, I'll take a look at it. Okay? It's about the best I can do. I can take a look at it. So, what I'm looking for from you, give me some suggestions. I'll take a look at the stocks you're looking at. But remember, I'm coming from a different place than you are. I'm already retired. I already have 6 digits. So 6 digits for me, well, that means I'm making plenty every single week. That's all it means. That's it. I'm not rich by any means, but I'm well off. I'm very comfortable. I like my life. My life is wonderful. That being said, let's see who's in the house. We got Elsa. All right, Elsa, nice to see you. Award Realty 3. All right, good evening to you too. Mike, what's up there, Mike? Over here. Oh, before I forget, there is 13 platforms. So I am broadcasting on 13 different platforms. So if I don't get to your question right away, don't think that I'm ignoring you. You're not the only dancer on the dance floor here. There are plenty dancers on the dance floor, meaning if I don't get to your question right away, I will get to it eventually. Before the end of the night, I answer all questions. Every single question I answer by the end of the night. And after we find out 5 stocks, I'm going to open up the phone lines and you guys can call in and ask questions. So if you want to have a conversation, hang out. Gravy! Gravy. All right. Gravy kilos. You like gravy by the kilo. That's a lot of gravy, dude. All right. So let's see who's in the house. Who's in the house? We have Rajeep. Typically gamer. Okay. Texas. E. Slater. Shrivelly. Okay. Shrivelly Wonder. Relax. Rabbit. Crazy Build. Cause and Nastra's in the house. What's happening, Cause? Your Pet Studio. Cooley Lee. Okay. CDR. Okay. BMW Goldfish. I got to think about that one for a minute. Peck. What's going on, Peck? CDR wants to take a look at Mickey D's. Now, I'll throw Mickey D's out. We'll take a look at that one first. MCD. As soon as we're finished saying hi, hello to everybody, okay? Peck wants to take a look at TSN. Let's write that one down. TSN. We'll take a look at it in a minute. Thank you there, CDR. Aniket. All right. Will IBM bounce? John, we'll take a look at IBM in a second. IBM, we'll write that one down too. That'll be the next one we look at. Hey, James, having fun? Absolutely. Tom, what is this music? That music is my theme song. It's all about me. That's why I love it so much. Sam wants to take a look at Goldman Sachs. Goldman Sachs. Okay, Sam, we'll take a look at that one. DGPA. What the hell is that? DG.PA. I'll take a look at it. I don't know what to tell you. CDR wants to take a look at Eli Lilly, LLY. All right. Dominique, Brad, Junior Forex. Coach Ernie. Nice to see you, Coach Ernie. The man, QUBT. What the hell is that? QUBT. All right, we'll take a look. HGRAF. What is that? HGRAF. Okay. All right. So who do we have over here? All right, Mike. There are a lot of stocks near there and at their all-time highs. Do you see larger downturns in the market coming? Norbert, how you doing? To answer your question, stocks do two things and only two things. They go up and they go down. That's it. Okay, the market itself, let's say it has mood swings. Certain times the mood swing is this direction, certain times the mood swing is that direction. Money is never lost, it just goes from one place to another. So as one stock's going up, another one's going down. As one's going down, another one's coming up. It's always going to be there, and there's always money changing hands every single day. Dvorky, GGLL. GGLL. It's on the list. We'll take a look at it. SOXL. XOXL. We'll take a look at that one also. On it. SOX. Oh, sorry. SOXL. Okay, we'll take a gander at it. All right. Zero. Thank you there, Zero. Who do we have over here? Over here. Who do we have? Garlic. JD Garlic. Eric. Pete, 2124. Boar Bear of Reviews. Okay. Tio Snipes, Solo Trader. Todd. What's happening, Todd? Justin, G Shug. Den, Scarlet Clown. Oh, Sacred Clown. Okay. Kevin Banks, DMN, DWM. All right. All right. Observer, Mr. James, BOA. Tardi Prave, Senor. Okay, you want to look at Bank of America. Bank of America is actually BAC, okay? But I understand what BOA means. Everybody thinks BOA should be Bank of America, but it's not. It's BAC. Muchas gracias, Senor. Okay? I only know what Costco is. Okay, you do realize there's 11,459 other companies besides Costco. Yeah. Options Arcade. Okay. Tommy. Joey Drezalid. Okay. All right. Elfship. Brian. Prissy. Asim. Aiden. John Insure Dante. Okay. Dave Kobe Shade. Okay, whatever. I am Amon. Okay. Dell. Ooh, Dell. I like Dell. Ooh, we got a lot so far. I saw another one. IBM. We already have IBM on the list. Wavelength. Natalie. Dave. Alexis. Penny. Lana Raha. Okay. My Tribe. Doug. Biffer. ET. Energy Transfer. I can tell you that's going to be a no right off the top of my head. Energy Transfer. The numbers are horrible, but we'll take a look at it and I'll show you. ENVX. I never heard of it. ENVX. Okay, Richie, Ronaldo, Ray, Joey, Pablo, Stevie, Aldo, Wiki, Wendy, Physicians Lounge. Okay, Aiden, Papa J, Pizza Powwow, Johnny Love, Dave Geno. Johnny Love likes Nike, NKE. All right, wow, we're running out of places to write this down. Left-handed designs. Edward, what's going on? IBM has Tank City today. Oh, was Tank City today. Okay, I'm assuming that went down. Okay, fine. We'll take a look at it anyway. But thank you for that, Clyde. Indiana Heritage. Jacob. Chris Willard. Pete, William, Aaron, Fox, Brian, Jonathan. Nice to see you there, Jonathan. I was beginning to worry. I checked all the charts and you weren't anywhere. But Nick, good evening, James. Are you planning on doing a call thing tonight? Absolutely. Okay, make sure you call. Actually, you can call now while I'm saying hi to everybody. California Water, Soda, Jetty, Johnny Fani, Sammy High, Rick, no one important. Now that is an interesting name. Largest loss in company history fell 79 points. Ouch. Kagdala, Dave, Alco, Robert, Matt, Newly, Sleepy Shian, and Vidman. Okay, cool. M. Junker wants to take a look at Macy's. I love Macy's. I do. All right, so we have like 20 stocks to take a look at. That should keep me busy. Can I do IREN? Why? Why IREN? IREN. All right, we'll take a gander at that one also. All right, what happened about SpaceX? Hell no. Okay, when I say make sure you understand everything you need to understand about a company before you put money into it. Costco hasn't even been around for a month yet. How could you possibly know everything about it? All right, Mr. Keelan, don't do that. Just don't. That's not a nice thing to do. All right, let's get the ball rolling down here. Norbert, Orb Flow Trading. I love Costco. Good for you. Now, don't get me wrong, Costco's interesting. LUV. Isn't that Southwest Airlines? LUV. All right, so let's get the ball rolling. First and foremost, always, let's take a gander. The first thing I want to look at on anything is always going to be the 1 year chart. Why does this look off? Someone came in and moved my table. All right, that looks about right about there, which means I got to adjust this one. He was muted. Thank you there, Den. Casper, I'm blessing the first fight. Don't do that, Casper. All right, see, I got to spend my time getting rid of people like that. Nike as well. It's been down 40% the past year. Okay, let's take a look. Okay, first thing I want to say is Wally World. Was this Walmart? No, this is Mickey D's. 5 things I want to look at. Always. It's always, for me, it's always A, B, C, 1, 2, 3. What am I looking at? 5 things. The high, the low. Where was it? Where is it? Sideways, up, down, up, down. No, it's dropping like a rock. But if you really like Mickey D's, okay, take a look. 30-day high. She drops. There's your bottom. Shoots back up. Here's your new top. And now she's dropping, looking for the new bottom. So this will be good for next week. So I'm going to write Mickey D's for next week. MCD for next week. No today. All right. Can you IRN? He was muted. Love. We did that one. IRN. Okay, great. Wonderful. All right. So next on the list, Costco. Really? COST. Okay. $921. Now think about this for a second, because at $921 per share, to do one covered call is $91,000 for one position. Now, some people are at that game level. Just to let you know, I'm not. I could be, but I prefer not to be. The reason being, I don't want to put $91,000 into one position. No. John Turek, what's going on? All right, so here's the top, 1,100. It drops down to 921. Okay, well, let's zoom in and look at the last 30 days. Here you go. Here's the last 30 days. Here's the top. Here's your bottom. Here's where it was 30 days ago. Here's where it is now. She dropped. Now she's bouncing back up. Now, anytime I see a bottom after a 30-day top, I want 2 days to the upside, and then on the third day, I'll jump in. Well, Friday was the bottom. Monday was 1 day up. Today, not really so much, because we have a higher bottom, but we have a lower top. So no for Costco this week. UNH, University of New Hampshire, actually it's United Health Group. I don't buy at the high. No, that was quick, wasn't it? No, I don't buy at the high. Sorry, dude. Something about $900 per share just doesn't thrill me. See, if I can make 1, 2, 3% every single week on a $5, $10, $20 stock, why would I put 900,000? Yeah, 900,000. No, wait, 90,000. No. So SpaceX is a no-go for you. Absolutely. Okay, when I say, all right, no, Chance, all right, Chance, I'm 62 years old. See if you can follow the bouncing ball. Remember that? Follow the bouncing ball. All right, listen closely. I'm 62 years old. I'm retired. Okay, my Social Security is $589 a month. I put in 5 decades of my life and I get $589 a month. That's all I get. Now, I'm okay with that because I did have my own business for the longest time, which means I set up my own retirement account. And my own retirement account is a hell of a lot better than what the government offers me. So, to make a long story short, I don't want to put my money into something where I have to wait and wait and wait and wait. I just have no desire to wait in order to make money off of it. No. Sorry. No. That's why I bought Costco calls on Friday after the big drop and caught the bounce on Monday. Nicely done. Now, I don't buy options. I'm a seller. I sell them. I don't buy them. So I'm glad you made some money off that. Nicely going. Follow something you like. Get intimate with the stocks you like. Because as they move, you can notice patterns, jump in, jump out, and you're all good. All right. DNN. Okay, red bean, Tommy. We'll take a look at that in a minute. Okay, sit tight. All right, so next on the list, just going by what you guys want to look at, Macy's. Ooh, I like Macy's. Now, it takes me 2 to 3 seconds every time I look at a chart, and I'm always looking at the same 5 things. The high, the low, where was it a year ago, where is it now, and where is the money flowing? Here's the top of the year, she pulls back, here's your bottom, now she's turning around. So let's zoom in and take a closer look after we see if the numbers are going to work. Remember rule number 5? Make sure all the numbers work. Well, what are those numbers? Well, the numbers are pretty simple. Okay? What am I buying it for? 2321. 2321, 2321, 2321, 2321. Well, that's easy to see. Well, if I'm buying at 2321, I want to sell the closest strike price that will allow me to collect a 1% return on the premium using a covered call. Now, the covered call is one of the safest strategies there is. Okay? So, if I'm buying 2321, I'm going to sell the 23s and pick up 48 cents. Well, I'm not really picking up 48 cents because if I sell it at 23.21, if I buy at 23.21, I sell at 23, I'm losing 21 cents. So take 21 cents off of that, I'm still walking away with 27. That's still over 1%. But, hold on, the numbers here are all set from the closing number of today. The closing number of today, 23.21. But what is the aftermarket hours? Well, the aftermarket hours number is 24. So let's go to the 24. It doesn't look good here, but these numbers are all going to change first thing in the morning. These are the only numbers that are changing right now because the market is open, but it's after hours. Markets, that's confusing. Don't even think about it. Thanks for the honesty. You're welcome there, Chance. See, Chance, I'm not trying to sell you anything. I'm just looking at it from my point of view. My point of view is going to be different than yours because at this moment in time, don't take this wrong, but at this moment in time, you're just a little blip on my screen asking me a question. Well, the little blip on my screen asking me a question, I have to fill in all the details on who you are, what you're looking for, what your age is, what your risk factors are, and then it's all guesswork. I don't want to do that. So I give it to you as if I was going to do it. If I was going to do it, there's certain criteria has to be met. It's got to be a profitable company. It's got to have weekly options. And the numbers got to work for me. And then the motion or the stock going up and down has got to work also. This meeting is being transcribed. I don't know why. Jim Bibby, what's going on there, Jim? Nice to see you. Okay, so let's zoom in to Macy's and see what's going on. Last 30 days. I always want to take a look at the last 30 days. because the last 30 days are going to give me a good indication of where the stock is going next. Okay, and it's pretty easy to see. And again, it's always the same 5 things. The high, the low, where was it, where is it, where's it going? The high, the low, where was it, where is it, where is it going? Plain to see, 30 days ago she dropped, jumped up, hit the high of the 30-day period, profit taking. Now she's bouncing back up again, 23.21. Let's do the 23.50s, that looks pretty good. All right, let's get this right to there. Right there, covered call, the 23.50, there it is. One contract. Here we go. Now, the reason I'm only doing one contract, I get this question often. Why are you only doing one contract? Well, I'm only doing one contract as an example so you can understand what the numbers look like. Okay? Is that Varanukaram? I don't know. Joe Schmo, what's happening? He's sharing knowledge, not advice. Thank you there, Joe. CMG, that's Chipotle, and then Amazon. Okay, sit tight. We'll take a look. Okay, so here's the order. Always read it out loud so you can hear what you're doing, because your eyes can play tricks on you. All right, one covered call, Macy's. 17 July, that's this coming Friday, 3 days away. The 23.50 call option. Well, here's my profit, 59. Here's my investment, the cost of the trade, including commissions and fees. Now, I found in the past, it's always a good idea to use a metaphor for what you're doing. Are you investing in stock market? Are you sending your money to Wall Street? Are you investing in a company? Or, like me, are you creating weekly cash producing assets? It's a hell of a lot more romantic that I'm investing in the stock market. There's 11,497 different companies in the stock market. I'm not doing that. I'm creating a weekly cash flowing asset. So as long as I own this asset will constantly give me weekly cash flow. But I do have to monitor it. It's kind of like rental real estate. It's kind of like a vending machine, kind of like a rental car, rental boat. Buy something, an asset that gives you a return on your money. That's what I'm doing. Calculator. Figure out what our rate of return is. If my profit, max profit 59, then I want to divide it by my investment, cost of the trade, including commissions and fees, $22.91, because I want to see what my rate of return is. $22.91, grand total of 2.5% for 3 days. 2.5% for 3 days. Think about it. But, number one, do you like the company? That's always going to be a big one. Do I like this company, and do I like this company at this current price? It's a yes or a no. You like it, you don't. Yes, no. They're making money or they're not. So we're going to save this one at 2.5%. Of course we are. 2.5. Hold on a second. I got to do something first. I got to move this over. How about we go like this? Now this is 2 weeks ago. All right. All right, get it out of the way. Now, let's pull up what we're looking at today. Come on. There we go. There we go. Macy's 2.5%. Let's clean this up. We're going to come right back to it. Sit tight while this is cleaning up. Back to there. And here we go. You ready? There it is right there. Macy's. One covered call. Macy's. Big old M. Macy's. 17 July 26th. That's this coming Friday, 3 days away. The $23.50 call option. Well, that means whoever's buying it from me has the right to buy the stock from me at $23.50. So no matter what happens with the stock tomorrow, Thursday, or Friday, by Friday, 4 p.m., whoever buys this option from me has between tomorrow morning and Friday afternoon to do whatever they want to do with it. But until then, I'm going to collect 59 bucks. 2,200 is my investment. Well, it's 2.5% for 3 days. Well, that kind of works for me. All right, so we're going to save this one. Go just like that. 2.5, and it's a big fat M. And what's next? All right, DNN. What the hell is DNN? Nike, NKE, NKE. Try it one more time. NKE. Something ain't right there. There we go. That's better. Okay, so Nike. Here's the top. Here's the bottom. Here's where it was. Here's where it is. Down. We're going to say no only because that right there. You might not be able to see it, but let me zoom in to get a better idea of it. What do you think? Here's the top. Look at the movement. Down, up, down, up, down. So it's coming down at the moment. As much as I like Nike, not this week. That's it. Just not this week. Not no, just not this week. Okay? Next, do you add contracts at different strikes as the week goes on if it looks favorable? All right, Mike, what I'm looking at, I ask myself 5 questions every single day. You ready, Mike? What did I buy? What did I sell? Where is it right now? Where does it look like it's going? And what should I do? Every day, every position. Think of it as having a dog, a cat, a bird, a fish. You got to water it, feed it, clean out the cage, take it for a walk, stuff like that. So for my money, what did I buy? What did I sell? Where is it? Where's it going? What should I do? Same thing. What did I buy? What did I sell? Where is it? Where's it going? What should I do? Every single day. It takes less than 5-10 minutes. 5-10 minutes every day. That's it. Next. ENVX. What the hell is that? ENVX. Okay. Let's find out. You ready? Enovix. Whatever. Okay, here's the top, the bottom. Where was it? Where is it? Down, up, down, up, down. What's going here? Before I even do that, the 5s are going for 19. Well, yeah, why not? But what does this look like? Okay, 30-day high, 30-day bottom. She shot up, pulled back down. We get 1 day. That's it. We only have 1 day up. But if you like it, maybe that's a good stream. Right there, 1 day up. That's it. Just one. So not this week. Okay? Next, ET. Energy transfer. I can tell you it's going to be a no right now, but somebody wanted to take a look at it, and I said I would, and I'll tell you why I'm going to say no. You ready? Right here. I don't have to look at anything. I know it because I look at it because people ask me about it every single week. Why no? Because look, 2 cents, 1 cent, 0 or 0. Now, these are the premiums. Now, don't get me wrong about the company. Okay, number one, it's at the 30-day high. No, thank you, but that's not the point. Regardless of what the stock is doing, fine, lovely. If I can't make money on the stock going up, well, I want a backup. I want to take a look at the dividends. Are the dividends increasing? Okay. Well, if not, what do the premiums look like when I sell a covered call? Well, 1 cent, 0, 0. Yeah, no. Okay. High, no, thank you. 0 premiums, no, thank you. Dividends, I don't know. So, no to energy transfer. Then there's a bunch of companies like that. They could be the greatest companies in the world and have the greatest, nicest people in the world. But if it's not financially feasible, that's a no. Sorry. It's you do what you want with my money. With my money, I want safety first. Okay, profitability can come back later. Okay? But I want safety first. If the company's paying a dividend, great. Is the dividend increasing? Wonderful. Is it the right time to buy? No, I don't buy at the high. Look at this. Okay? Down here, shoots up nicely. Now it's the high of a 30-day period. What, just because I buy it, it's automatically going to go up? No, I don't want to take the risk. Bottom, shoots up. It went from 18 to 20. I know it doesn't sound like a lot, but from 18 to 20, well, that's $2. $2 on an $18 stock is what, 11%? It just jumped up 11% in 30 days. Do I really want to get into that? No, I don't. No to energy transfer. TSN, what the hell is that? I like it better when I know the stocks are off the top of my head. No, not even 2 seconds. No, I don't do monthly options. Rule 4 is pretty simple. Weekly options only. Sorry, monthlies just don't work for me. Lucky, what's happening? Nice to see you. All right, IBM. Who wanted to take a look at IBM? Now, I do have some IBM. Ooh, big drop. Look at that. But before, look at that. Holy shit. Ouch. I have some IBM. I did not see that today. All right, well, here's the thing. I'm not going to say no to IBM at this moment. Let me explain why. Well, because IBM's been around for a very long time. They've been using it as kind of like one of the companies we use to measure everything by. Okay, but take a look at what happened. You had 30-day high. She dropped, shot up nicely, came down, was getting ready to pivot right there, but had a big, huge drop today. Now, I got a question for you out in the audience, because I don't sit in front of my computer all day. Listen closely, I have no clue why this happened today. And I'm sure there's someone in the audience that does know why it did this today. But here's the thing. I want to take advantage of it. Well, I don't want to take advantage of it tomorrow, but maybe on Friday or Monday. So I'm going to write IBM down first thing for Monday. I'm going to explain in a second. Hold on. IBM. All right. The reason I'm saying I want to wait until Monday is because when I find a new bottom, especially with a company such as IBM, they're so huge, and there's always the opportunity that the market maker overreacted. What does that mean? Okay, the market maker is the person. All right, see if I can back this up for a second. Hold on. Let's get rid of this. Anytime you're investing in the stock market, there's 5 numbers that are very important. 5 numbers. It's the opening price of the day. You can't really see it here, but the opening price of the day. So what did it open up for? Okay, on a red day, it's the top line right there. Second number, the closing price of the day. On a red day, it's the bottom. Okay? Opening price, closing price, the high of the day, the low of the day, and the volume. Okay, 5 numbers. Actually, it's 6 numbers. 6. Okay? The opening price, closing price, high of the day, low of the day, volume, and then the range. Number 5 is the range. And the range is the distance between the bottom of the day and the top of the day. Bottom of the day, top of the day. Bottom of the day, top of the day. Bottom of the day, top of the day. How much did the stock move throughout the day? That's the range. Open, high, low, close, volume, and range. Well, this right here, out of those six numbers, only one number is controlled by one person. Okay? Okay, you get six numbers. One number is controlled by one person and only one person. The other five numbers, that's you and me. Okay? Because we decide what's too high and we decide what's too low. We decide how much volume we want, how much we want to buy. As stock drops, great. How many do I want to buy? How many do I want to sell? So we have control over that. What we don't have control over is the opening price of the day. So she closed here yesterday. That's the closing price yesterday, $290. So why, this is a good question, why did the market maker feel that we closed $290 yesterday and today we opened up, what is that, 228 looks like? Hold on. Opening 226. Okay, so yesterday we closed at 290. Okay. 290. And today we opened up 226. Why? Serious question. Did they miss earnings? Is there a massive lawsuit? There has to be a reason, and somebody's got to know why the market maker did that. Because there's only one person in charge of the opening price of the day. That's the market maker. Every single other number that happens throughout the day, that's a you and me thing. We buy, we sell, we create the volume, we create the highs, we create the lows, we create how much we want to buy, how much we want to sell. But what we don't do, what we don't have access to, is the opening price of the day, and that is the market maker. He decides that. Now, I want to show you something and see if you can grasp some of my credits. Clyde, huge overreaction, small earnings miss. Clyde, I want to show you something. I want to show all of you something because this is something that most people just don't understand. Okay, just don't understand. Are you ready? Okay, the bid. I gotta write this down so you can actually see it and follow along. You got a piece of paper and pencil? Follow along. This will be a fun exercise. You're going to see it and you can say, oh, holy shit, I'm being ripped off. Yeah, because you kind of are. Kind of are. Hold on, watch this. Okay. Okay, the bid. 218.10. The ask. 218.42. Do you know the difference between the two? 218.10, 218.42. The difference between the buy and the sell is what's called the spread. The spread is the amount of money that the market maker gets to share. Okay, so the market maker is making 32. Wait till you see this number, it's going to blow you away. The market maker is making 32 cents per share on IBM at the moment. It doesn't, I know, you're thinking 32 cents is nothing. Hold on a second. Okay, so I need you to remember that number, 32 cents a share. So let's go on over to the chart, because there's something I want to show you on the chart. Now on the chart, right here behind me, okay, you got the high. You got the high of the year, the low of the year, the movement, blah, 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 okay? Now I want IBM, I don't want UPS. IBM. Okay, IBM. The high, the low, where was it? Okay, this is the momentum, see it? What I want you to pay attention to is right down here. This, down here, is the volume. That's how many shares are being traded on a daily basis. Check this out, it's gonna blow you away. You ready? So this number here, okay, the average. The average is gonna be right about there. You see it? The average, 9.38 million. 9.38 million. That's average. Average, 9.38 million. Now let's multiply that times 32 cents per share. Okay, so calculator. Whoops, no. 32 cents per share. Multiply by 9.28 million. Okay, so on any given day, on average, on average, 9.38 million, the market maker makes $2.9 million a day. $2.9 million a day. That's on average. Hold on. 2.9 mil per day. That's on average. What happened today? Let's get rid of this. Okay. Now, what happened today? Check this out. 66 million. All right, hold on. 66.8 million shares traded today. So let's get that calculator out again. Same number we're using, 0.32 cents a share. That's what he makes on average. Multiplied by, how much was that again? 66 million. Today, 66. Okay. Multiplied by 66 million today. Okay, so let's get rid of that. Okay, so let's see if you understand this. You ready? On a normal day, the spread, that's the difference between the bid and the ask. The difference between the bid and the ask for IBM at this moment is 32 cents a share. Now, on average, 2.9 million shares trade every single day. So the market maker, Clyde says, there's a small overreaction, a minor mishap with the earnings. We're talking about a company that's been around for over a half a century. And okay, anyway. So on an average day, they make $2.9 million. So remember, it's just one person. One person is the market maker. He decides the opening price of the day. So the market maker opens up this morning, sees this piece of paper and says, we missed our target. We missed our target. 4 words. We missed our target. That's it. And he walks away with $21 million. Think about it. We missed our target. Market maker gets that email, we missed our target, and all of a sudden he drops the price from $2.90 to $2 whatever the hell it is, and he walks away with $21 million because of all of that volume that's not normally there. The average volume is right here. He gets that email, we missed our target. Now he drops it. Volume, huge explosion in volume. What does he care? He don't care. He gets the spread between the bid and the ask. And he walks away with 21 million rather than a crappy old 3 million. 3 million a day. But no, today he got 21 million. Bless his heart. Let's get back to finding some companies. But do you see how that can work? Okay? There's a big drop in the earnings. Big deal. Did the people at IBM get a phone call and say, hey, yo, dude, yeah, I know, all your department's going to be laid off because we missed our earnings? It doesn't work that way. People are still going to go to work. People are still going to put in their 40 hours. People still going to go to work, go home, take their vacations. Everything's going to be the same. Nothing really changes. It's the perception of what's happening. Do you think that gaps usually fill? Absolutely, Mike, they do. Do you add contract? No. Okay, Mike, it's always the same questions. What I buy, what I sell, where is it, where it's going, what should I do? Same questions every day. Now, do I think the gap fills? Gaps always have a tendency to fill. Gaps always have the tendency to fill. So eventually, as I was saying earlier, I am kind of excited about this. Not the fact that I own it, but the fact that it dropped real huge. It's not going to go out of business. They're not going to close their doors. They just missed the earnings. Big deal. It's not a big deal. It happens all the time. They call this a black swan event. There's a minor discrepancy with the earnings. Ooh, we missed our earnings. We missed our target. So he drops it. Huge amount of volume. He walks away to hero. Yeah, we all lose out. Okay? So as the stock goes up, if you don't take your profits, remember, a profit's not a profit until you take it. And if you don't take your profit, you cannot bitch and moan when the market maker takes it away from you. Okay? Number one, it's not a profit until you take it. Number two, nobody ever went broke taking profits. Anyway, so that's IBM. Let's go on to the next one. Spend too much time on that. So anyway, I am kind of excited about IBM, but I want to wait for at least 2 days to the upside. So tomorrow's Wednesday and Thursday, maybe by Friday. Maybe. But yeah, that gap will fill eventually. I already do have some IBM, and yeah, I got it up about here somewhere, so yep, I'm going to fill that one. But I'm not going to get rid of it, because I never sell at a loss. All right. SATA, what the hell is that? Never a good sign. If I have to say, what is that? It's a no. ArxPac. July, August, October, January. You do realize those are monthly options. It means they trade once every single month. Okay? Big letters right up there. Weekly options only. Rule 4. Weekly options only. Try to see if I can get to these questions. Sweet Dan, this is like the third person I had to get rid of. Patrick Dove, the streak sheet is weekly, thank you. What are some good longevity stocks I'm looking long term? All right, Patrick, here's my idea. You ready? Long term, dividend kings, dividend aristocrats, dividend champions, dividend contenders, anything on Warren Buffett's list. That's my idea of a good long-term stock. Those 5 lists I just gave you. All right, next. We just did IBM, SOXL, SOXL. Interesting. 20 jumps up to 300, drops down to 160. Now we're around here. Don't really know where it's going. This is one of those triple X or double X ETFs. Very risky, but also very profitable if you know what you're doing. You know what I mean? All right. So here's your top. Here's your bottom. I don't know about you, but that baby's going down. Down, 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 baby, down by a roller coaster suites. Yep, thank you there, Clyde. Obi-Wan, nice to see you again. George Weber, hello. Mark Kyvan, they reported earnings today. Yeah, probably. Okay, we did that one. Meta, why the hell do you want to take a look at Meta? Seriously. Hell no. Do you remember I said gaps have a tendency to fill? Look at this. You got that gap, that baby's coming down. That gap here, that baby's coming down. Here's your bottom, here's your top. What do you think? It's coming down. Not today. No, thank you. And besides, Meta what? On the third year? 3 years. They just started paying dividends. They're on 3 years. Brother, I like your style. Thank you there, Dave. All right. Huge overreaction. I'm going to agree with you. Huge overreaction on that. We missed our target. Yeah, that's worth $21 million. We missed our target. I love that one. Earnings next week. Okay. Okay, Sweet Den. Anytime you see someone doing this, you definitely got to get rid of them. This is like the fifth one I had to get rid of myself. Isn't most of the stock crossed between with better bids and offers? No. There's always a bid and an offer. It's like, all right. It's like supply and demand. Okay, if there's not very all right, if there aren't very many grapes, they're going to be worth a lot of money. If there's too many grapes, they're not going to be worth a lot of money. Supply and demand. So if I'm buying, okay, I'm paying for this price. If I'm going to sell them, I want to make a profit. So I'm going to sell them for this price. So I'm going to buy them for this price. I'm going to sell them for that price. The difference between what I buy and what I sell is going to call the spread. That's how much I make. That's what the market maker does. He buys, he sells. That's all he does. He buys, he sells. He creates the market for you. So you cannot sell to me. I cannot sell to you. You can only buy from the market maker, and you can only sell to the market maker. To become a market maker is a huge financial and a huge time commitment required. Vitality. What would you do if you were in IBM and it dropped against you? I would calculate how much money I had, watch the stock till it hits a certain point, and then I'll jump into dollar cost average. Because I already have some IBM. Okay, but IBM that I have is at a higher price. So now I just made that big drop. So yeah, I want to dollar cost average on my position. Just makes sense. Michaela, how you doing? Thank you for that, Michaela. Okay, OxPack, you asked me 6 times to take a look at SATA. I looked at it, it's a no. Terribly sorry, no. Ben Woodward, I'm going to ask you, what the hell are you thinking, brother? Seriously. Okay, I get 5 simple rules. Rule number 3, never buy anything that's not consistently profitable. So Ben, let's take a look at TQQQQQQ, all right? TQQQ. You're right, Ben. You're right. You're not going to like it, Ben. Nobody, when I say you're not going to like it, nobody ever likes it. Seriously, nobody ever likes it when I say it. You're not going to like it, Ben. Here we go. Pro Shears, Ultra Pro, QQQ. There it is, right there. TQQQ. Current price, $75.02. Say, what I'm going to look at now, Ben, is I'm going to look at how wonderfully profitable TQQQ is. Now, Ben, I'm looking for 2 decades. Because remember, my money, I want a company that's been profitable for at least 2 decades. That is 10, 20 years. Okay, so Ben, there are literally 11,489 stocks that we can take a look at. Or is it 97? I don't know, something like that. But over 10,000, so over 11,400 companies we can look at. So why are you putting your money into TQQ? Let's take a look at the profits. Are you ready, Ben? Now I want 2 decades. Here's the dividends. Now, if you didn't know, Ben, the dividend is a portion of the company's profits that they give us. So if TQQQ is wonderfully profitable every year, I will get more and more and more money. That's just the way it works. Kawardaruga. Now we'll take a look at now a little bit. Okay, I want to go back 20 years, and here's I have a major problem. Ben, major issue, Ben. You ready? First dividend, 2014. First dividend, 25. First dividend, 2014. Dude, you're going to need at least 100,000 of them just to get 2 cents. That's one. Okay, one dividend in 2015, nothing in 2016, nothing 2017, nothing 2018, nothing 2020, nothing 2021. Then we're only up to the last 5 years. Okay, so 2022, 4.9. All right, 4.9. Higher, lower. Higher, higher, lower. Higher, lower, higher, lower, higher, lower. Can you explain to me, Ben, in a manner which I'll understand, because I'm having a little bit of difficulty with this, why you're putting your money into a company that goes down this almost the same amount of times it goes up? Think about it. You're putting money into the company, and the company says, you know what? I think this month or this year we're going to make less money than we did last year. That's our goal. We're going to make less money this year. Why the hell would you want to put money into that? Seriously. Okay, number one, it doesn't have. No. I'm not even going to bother anymore. No. No, no, no. Hell no. Okay. No, sorry, Ben. It's not profitable. Why would I put my money into something that's not profitable? Oh, wait a minute, wait a minute, wait a minute, wait a minute, wait a minute. Let's take a look at the summary to see how much money you're getting as a yield. What is the yield for the Qs? Hold on a second. You ready, Ben? Check this out. 46%, Ben. 0.4. Dude, you're not even getting 0.5% a year. 0.5% a year. Inflation is over 3%. And you're getting not even 0.5. No. No. Sorry. I just don't understand it. I seriously don't. Dude, it's your money. You work, see, I have no idea, but I'm making the assumption. You work 30, 40, 50, 60 hours of your life to bring home a paycheck. And you're putting a little bit aside for your future. And you're putting it in at less than 0.5% per year. And you think that's good. No. What the hell are you thinking? Seriously. All right, next, Goldman Sachs. Goldman Sachs. No. I don't buy anything at the high of the year, and I sure don't buy anything at $1,100 a share. That's $110,000 per position. I could, ain't no freaking way I'm going to though. I can make the same amount of money off of a $20 stock or a $30. When I say the same amount of money, I'm talking percentage-wise. Because if I put $100,000 into Goldman Sachs, if I put $100,000 to Goldman Sachs and I make 1%, that's only $1,000. Okay, I can put $100,000 into a $20 stock, a $30 stock, a $50 stock, and still make the 1%, which is $1,000. I would prefer 4 or 5 different companies rather than just one, because not everybody has $110,000 for one position. And that's just one position, one contract. No, sorry. Yeah, baby. Dude, I haven't seen you for a while. How you been? Yeah, baby. All right, so Coward Daruga. All right, wants to take a look at now. And I actually have some now. I do. All right, kind of went the wrong way, though, didn't it? Here's the top, here's the bottom, down, up, down, up, down. What's going on right there? 30-day high, 30-day bottom, shot up, now she's coming down. No. Next, DGPA. What the hell is that? DG.PA. It's nothing. There's nothing there. Dollar General, no. Okay, I don't buy anything at the 30-day high, and today she's starting to come back down again. Your bottom's at 102, she jumps up to 126. That's a $24 increase. $24 increase on a $100 stock. That's a 24% increase. why would I think it's going to go up just because I bought it? Think about it. 30-day bottom, 102. Jumps up to 126. That's a $24 increase, about 24%. Yeah, she jumps up. Profit taking, this baby's going to come down. I don't want to be involved in it. Now, don't get me wrong. I love the company. I do. But I'll wait. I'll wait a week or two for it to drop back down again. People take profits. People always take profits. Why would you buy something, watch it jump up, and not take profits? It just doesn't make any sense. Eli Lilly, we did that with Goldman Sachs. We did Dollar General. We did Eli Lilly. QBT. What the hell? Is that Qbert? QBT. QBT. Nothing there. HGRAF. HGRAF. Who came up with this one? No. No options. No thank you. GGLL. Hell no. Come on, you guys. SOXL. SOXL. Hell no. It's dropping too. Bank of America. BAC. No, I don't buy anything at the high. See? Why would I buy at the high of the year? Well, you think just because I bought it's going to keep going up? It was at 49. Now it's at 60. 49 to 60. That's 11. 61. Right, 30. That's 11. That's $12. $12 on a $49 stock is 23, 24%, something like that, from here to here. You don't take that profit. That's a you thing. It's not a profit till you take it. James, what is it set up to get the screen that you use? Cesar, chill for a second. Let me do a couple of things first. I'll get to that in a second. Dell. Ooh, take a look at Dell. I love Dell. Not today, I don't. Okay, I don't buy anything at the high. It just doesn't make sense to me. IREN. IREN. It's dropping. Okay? No. LUV. Oh, we're out already. I went through 20 already? No. Same thing. Look. 36 jumps up to 54. Now she's at 47. Okay? Shoots up, 36 to 54. That's 10, 20, 18. $18. $18. Oh, holy shit. $18 on a 36. $36 jumps up 18. That's a 50% jump. Of course it's going to go down. Cam wants to take a look at Hood. Interesting. What's going on right there? You got the top, you got the bottom. Where was it? Where is it? Up, down, up. What's going on right there? Let's zoom in. Last 30 days. I don't know. It don't look good. 30-day bottom shoots up, down, nope. Nope. Sorry, dude. Delta Airlines, brother. Brother, what's happening, brother? Again, no. 30-day bottom shoots up, profit taking. Now, don't get me wrong. I'm going to put this on my list for next week. You know why? That 76 jumps up to 96. 76 to 96 is $20. Okay? That's a little bit less than 30%. 30% jump. Profit taking. Here we are right here looking for a new bottom. As soon as we find new bottoms, we'll turn around and go back up. If you like the company. It's always going to be that way. Do you like the company? It's a yes. It's a no. Shit, we only found one today. This is not good. Can you analyze STRC? STRC. Hell no. I can analyze it. You ready? July, August, September, December. I don't do monthly options. They've never, ever, ever gone my direction. No. Bruce, what are you, shitting me? Didn't we just do the Qs and SPY? All right, Bruce, you asked for it. SPY. SPY, you ready? Why are you putting your money into something that's paying you 1% a year? 1% a year. What the hell are you thinking? That's SPY. Now let's take a look at the Qs. Okay, Invesco, Qs right there. You shitting me? Really? Bruce, are you shitting me, dude? Seriously. SPY is paying 1%. The Q's 0.4. And you think that's good? Now, don't get me wrong. If you can do one over the other, I'd go to SPY. It's more than twice as much. But if inflation is 3%, why are you putting your money into something that's paying you 1.1? There are savings accounts that pay 4%. Think about it. It's a numbers game. The Qs are paying 0.41. SPY is paying 1.01. High yield savings accounts are paying over 4%. I'm at a loss. Seriously, I am. But for the fun of it, just for the fun of it, let's take a look at SPY. All right, at I was going to say at 9:45, 15 minutes, I'm going to open up the phone lines. We'll take calls. Apparently, we're not going to get our 5 today because there just aren't any. Joe Schmo, CMG, Chipotle. Let's take a gander at it. CMG. Joe, what do you think? 30-day bottom, 28, shoots up to 37. That's $9. That's 30%. Joe, that's a 30% jump right there in 30 days. 30%, 30 days. Why would I buy it after it jumped 30%? Amazon. AMZN. $226 to $252. 248. So that's 10, 20, 22. It's only 10%. It's only a 10% jump. Okay? So Amazon jumped up 10%. Chipotle jumped up 30%. QUBT. What the hell is that? QUBT. Qbert. Okay, explain to me why I'm liking Qbert. Okay, here's your top, here's your bottom. Yesterday was the bottom, today's 1 day up. I like 2 days up. And then on the third day, I'll jump in. So, Monday is the bottom. Today, 1 day up. 832, the 850s are going for 19. That's over 2% if you like this company. So I'm grabbing at straws now, dude. Because we're at 9:30, we've been here for an hour and a half, and we only found one decent company. Yesterday, we found 6. Today, we got 1. Okay, 8.5. What do you think? Here you go, Qbert, 8.5. 1 covered call, Qbert. 17 July, that's this coming Friday, the 850 call option. The stock is currently at 835 and going up. Well, it looks like it's going up. I like 2 days up, and on the third day, I'll jump in. All right, so 37 is my profit. 813, that's it? That's not much. It's a hell of a lot better than 110 on, what was that? Goldman Sachs, $110,000. This one's only $21,000. Wait a minute, no, that's the wrong one. All right, so profit, 37 bucks. My investment, 813. 813, grand total of 4.5% for 3 days. Well, I don't know. Do you like Qbert? You either like it or you don't. One or the other. That's 2. We got 4 more coming up. All right, let's get rid of this. Get rid of that. Get rid of that. Back to this. There we go. All right, so here it is right here. Qbert. Q-U-B-T. One covered call, Qbert, 17 July 26. That's this coming Friday. The 850 call option. The stock's at 835 at the moment and going up. Okay. 37 is the profit. 813 is the investment. Cost of the trade, including commissions and fees. For, was it 4.5% for 1 week? You either like it or you don't. All right, that's just not going to work right. Hold on. How did I do this before? All right, hold on. All right. There. Q-U-B-T. Qbert. I'm probably offending someone right now because I really don't know the name of that company, but Q-U-B-T. It looks like Qbert. All righty. STRC. Didn't we just do that one? SPX 500 tomorrow. Jose, what the hell is SPX? SPX. Okay, hold on a second. So, Jose, you mean to tell me, seriously, this thing's at $7,500 per share. You do realize one covered call on this is $750,000. You're definitely playing in the wrong sandbox here, dude. No, I ain't doing anything at $750,000 per shot. No. Rocket Lab, Scott, RKBT. RKLB, Rocket Lab. Interesting. Okay. Here's your top, your bottom. Where was it? Where is it? Look at this. Up, down, up, down, up. Okay. 78.81. I want to look at the 79s, and that's paying for 263, just shy of 3%. Okay. Let's zoom in a little closer. Tell me what you think. Okay. 30-day high. She drops. There's the new bottom. Shoots up. Comes back down. 1 day up right there. 30-day high. 30-day bottom. Now she's going up. 79.90. The 80s going for, all right, let's do the 80s. 80s, why not? Rocket Lab. And here we go, Rocket Lab, you ready? One covered call, Rocket Lab, RKLB, 17 July 26, that's this Friday, 3 days away. The $80 call option, the stock is currently at $79.91, and she's going up. Okay. 250 is the profit, 77 is the investment. What's the rate of return? Well, for 1 week, we're looking at 257. 57 divided by cost of the trade, including commissions and fees, 77.43. What does that come to? 77.43. There you go. 3.3% for. Ooh, I like that one. 3.3% for 3 days. Wednesday, Thursday, Friday. The option expires this Friday. 3.3% if you like Rocket Labs. Ant World. How's it going there, Ant World? I'm actually in your morning group, Michael. Hey, yeah, babe. Cool beans. Thank you there, Michael. Okay, 3.3. I like 3.3. Why not? 3.3 for 3 days. All right, what are we looking at? All right, get rid of this. Get rid of that. Back to where you belong. Get back. Get back. Get back to where. Wait a minute. That's not right. Damn it. Let's try it one more time. Something didn't work out right there. Now let's try it one more time. One more time, if we try. One more time for all. Okay, single, and there we go, and there we go. All right, here it is right here. Rocket, now it looks better. Rocket Labs. One covered call, RKLB, Rocket Labs. 17 July, the $80 call option. Look at this, $79.73. And it's going up. Okay, if it makes sense. 255 is the profit, 7,700 is the investment. Cost of the trade, including commissions and fees. Got 5 minutes, we're gonna open up the phone lines. You guys call in, say, hi, hello, what's going on? There we go, right there. Whoops. Rocket Labs, that's 3. We need 2 more. Come on. Come on. Now touch me, baby. Can't you see that I am not afraid? What was that promise that you made? Riven? Really? Riven? Come on. What else are we looking at? Oh, wow. JEPQ, what are you, shit? Misty? Come on, dude. Seriously? Laser, talk about TQQQ. Dude, we already did. It's a no, double hell no. Laser, seriously. I'm serious. Take a look at the profits that TQQQ offer, and then take a look at the yield. Never mind. Cam, MOS. I said a MOS, a TER, a G with a double E. Wait a minute, where is it? Where is it right here? MOS. Oh, hell yeah. Who came up with that one? Nice. Cam. Check out that right there. The high, the low. Where was it? Where is it? Down, up. That is clear to see, clear as day. And $22.94. Come on. $22.94. Yeah. The 23s, 40 cents. That's close to 2%. Let's take again. I don't even need to look at everything else. Look at this. That's awesome. All right. Covered call. This is number 4. 23. There it goes. Here we go. 1 covered call. MOS. Mosaic. 17 July. That's 3 days away. The $23 call option. The stock is at $22.94 and going up. 51's the profit. 22 is the investment. What's my rate of return? That's what I'm looking for. I'm not looking for a rate of return for the year. I'm not looking for the month. I'm looking for 1 week, 3 days. I buy it tomorrow morning. I sell the covered call tomorrow morning. If it hits my target, great. I'm out. I got 3%. Get all my money back and I jump into something else. Or if on Friday I take a look at the numbers, what I buy, what I sell, where is it, where's it going, what should I do? I can roll it into next week, pick up another 1 or 2% next week. 1% every week is really not that difficult. You can take a look at my videos. There's over 2,200 videos on YouTube. Me standing in front of the computer doing the exact same thing day after day after day. And no, it's not AI. Check the dates. It goes all the way back to 2011. My first videos standing in front of a camera. 2011. Wow. All right, so anyway, hell yeah, let's do this one. But do you like the company? It's always going to come to that. Do I like this company? 51, 22, 49. All right. 51 is the profit. I'm going to divide it by 22, 49. That's my investment. 2.2. 2.2 for 3 days. 2.2 for 3 days. And there you have it. That's number 4. We need one more. 1 minute. Can we get one more in 1 minute? I don't think so. We might not even get set up. Okay, next on the list. HWM. Okay, Joe Schmo wants to take a look at UPS. He was first. He was a lot quicker. What is this? Didn't we just do MOS? No, we didn't. Holy crap. Oh, 2.2. All right, here we go. There it is. One covered call, MOS, 17 July, the 23 call option. Oh, look at this, 22.94. The stock's at 22.94 and going up. When we're buying it and selling it, it just doesn't make sense. 23, blah, 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 2.2. All right, while we're doing this, we're going to open up a phone call. Who wants to call in? Ready? Here's the number. Oops. 7 2 7 5 4 3 5 4 3 9 4 1 8 9418. Phones are open. Who wants to call in? Who's first? Brian, CVX. Ooh, now see, I'm staying away from all oil stocks as long as crap's happening over on the other end of the world. But here's the thing, okay? Here's your bottom. Shoots up, 30-day high. I don't buy anything at a 30-day high. It just doesn't make any sense. HWM. What the hell is that? HWM. Interesting. Okay, here's the bottom. Here's your top. Shoots up, pulls back up. That looks kind of interesting. Well, if nobody wants to call, I'm taking the number down. Fine by me. I'll be here all night. We got, 14 minutes left? So what does that look like? Does that look interesting? Before I say yes, 276, the 277s are going for 290. Okay, that's over 1%. All right, well, let's take a gander. Last 30 days. Here's your last 30 days. You ready? Here we are. We shoot up. We pull back. It is going up. Okay, makes sense. But do you like the company? Always going to be that question. Do I like the company? Okay, so HWM, Howmet Aerospace. I know nothing about this company. For the fun of it, let's go to Yahoo Finance, and put that in there. Okay, fair enough. What was it again? HWM what? What the hell? What the hell are we looking at? HWM. Just, be on the safe side. Always check. HWM. Howmet Aerospace, HWM, 200 and some odd change. Okay. Has nice earnings per share. The yield is absolutely horrible, but let's take a look at the profits. How consistently profitable are they? For that, I want to look at right here, historical data. Historical data is going to tell me all the information with all the numbers on the stock. So let's take a look. Jason Lewis, how you doing? Nice to see you. All right, so we want to take a look at dividends. All the dividends. Goes back to 2016. This only has 10 years of dividends. Okay, well, let's see. Are they increasing or are they not? So, Chris Willard, this is for you, right? All right, here we go, Chris. 10 years ago, Chris, 69, 46. Now, Chris, you're going to need to explain to me why you think going from 69 cents a share to 46 cents a share is a good thing. No? Why is the dividend being cut a reason to put your money into something that's only been giving profits for 10 years? 69, 46, 46, 46, 46, 46, 46, 46, 15. This is the part where I say hell no. Sorry, dude. Number one, they're not increasing through all these years here. And then they cut it by 60%. 46 to 15 is a 60% decrease in profits. Hell no. Seriously. No, thank you. Ken Wolfie, what's going on, Mr. Ken Wolfie? Nice to see you. Nice to see you. Thanks for stopping by. All right, next. All right. Kawa Durga wants to take a look at now. Didn't we look at now already? I think we did. Whoops. Over to there. N-O-W. N-O-W. Interesting. Now I do have some of this. Here's your top. She drops back up, back down, back up, back down. Now, I didn't notice it was coming back down. I jumped in and everything looked good. Take a look. Okay, 30-day bottom. She shoots up, pulls back. She's going up. Now she's coming back down again. What's going on? No real direction. No, thank you. NVTS, the man, MVTS. Interesting. Navitas, your top, your bottom, where was it? Where is it? Look at this. Up, down, up. She's 34, she drops. She drops about $20 on a $30 stock. That's about 60%. It's like a 60% drop. So what's going on there? What's going on? All right. 30-day high, 30-day bottom, only 1 day up. That's only 1 day. I like 2 days, and on the third day, I'll jump in. BNKG, what the hell is that? BNKG. Nope, nothing there. Yeah, baby, we already looked at IBM. Life, Cummings, you got to give me the ticker symbol, dude. What about Oracle? Simons wants to take a look at Oracle. O-R-C-L. Now, I do have some of this, but here's the thing. I'm looking for the bottom. Okay, now I have some Oracle, and I'm waiting for a new bottom to show up so that I can dollar cost average. Look, it went from 250, now we're down to 127. That, my friends, is what you call a 50% drop. So here's the thing. Now, I bought it, well, I don't even know where the hell I am, but even at a 50% drop, I wouldn't sell at a loss. Never buy anything you don't want to own. Fishing is life, BBAI, BBAI. Interesting. Not quite sure what we're thinking about here, though. But look, we're at $5. We drop down to 3, and this is the bottom of the day right here. But look at this, 0, 0, 0. That's going to be a no, no, hell no. Sorry, just no money there. Life, CMI. CMI, we got like 5 minutes left to go. CMI, can we come up with number 5? No. No, CMI, July, August, September, December, March, June. I don't do monthlies. The numbers just ain't there for me. All right, we did laser. We did that one. CS, Shane, how you doing? Julian. Is this factoring average annualized returns or just year to month? Julian, this is weekly, Monday to Friday. I buy on a Monday. I like to be out on a Friday. Brian, DPZ, is that like the dipshits, DPZ? Ooh, no. Now, I feel bad about this, Brian, because this right here, that looks perfect, but I don't like monthlies. Sorry, the numbers just ain't there. Jor, Eli Lilly, we already looked at it. Oh, Wilson. Oh, Wilson. Whatever. Misty, hell no. Hell no. MSTY. MSTY. Now, I always find it rather interesting. The Misty MSTY is one of those very heavily marketed pieces of crap, in my humble opinion. Hold on, because I can say piece of crap if I have supporting evidence to show you that it is a piece of crap, because then it's perfectly okay. Watch this. You ready? Yield max MSTR option income strategy, blah, 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 ETF MSTY. Let's go. Let's cut the bullshit. Go all the way back to the very first dividend they paid. Very first dividend. $20.64. That's the very first dividend they paid. Hold on. The very last dividend they paid, 20 cents. Explain to me. Now, I didn't go to college, so it should be relatively easy for those of you who did go to college, okay? I'm admitting I didn't go to college. I don't have the education that some of you may have. But somebody needs to explain to me, if the very first dividend is $20, the first dividend, $20, the dividend they just paid out is 20 cents. Explain to me why that's good. Because I didn't go to school for math. Okay, I'm not a financial advisor yet. Okay, I'm still learning the shit. But for some strange reason, when somebody says, oh, let's buy Misty, it's awesome. Explain to me why going from $20 per share down to 20 cents per share is a good thing. Hell no. It's not. Then take a look at the numbers. 52, 48, 31, 24, 18, 20. It keeps dropping, dropping, dropping. Hell no. Hell no. Tell me something good. Tell me, do you like it? Yeah. No, I don't like MSTY. Not consistently profitable. Scott, we already did Rocket Labs. Work smarter, not harder. Dude, okay, fuck it. We'll do it. JEPQ. You really think? See, rule number 3 is pretty simple. I got 5 rules. Rule 1's never buy anything you don't want to own. Rule 2, never sell a loss. Rule 3, make sure the company's consistently profitable. So why the hell are you looking at Misty, and why do you want me, why do you want me to look at JEPQ? Wow. Ugh. I missed all these. Sorry. All right, JEPQ. JEPQ, I don't know who asked for it, but number 1, it's only 4 years old. JEPQ is 4 years old. Why the hell would I want to buy it? Is that right? 4 years? Yeah, 4 years. Okay. You ready? 37. Lower, higher, higher, lower. Higher, lower, higher, lower, lower, higher. Hold on. Lower, higher, higher, lower, lower, higher, 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 lower, higher, higher, lower, lower. Higher, lower, 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 higher, 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 lower, higher, 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 lower, higher. It goes down almost the same times as it goes up. So why are I just don't understand. I don't get it. Why are you guys putting money into stuff that's not consistently profitable? It just boggles my mind. QBTU pays no dividends and has never turned a profit. Clyde, I didn't say I liked it. I just said somebody looked at it and I put the numbers in. Brian, again, I'm staying away from oil stocks when there's crap going on in the Gulf. All right. TSLL, Dvorky, I love TSLL. Let's take a gander at it. TSLL. Okay. Here's your top, here's your bottom. She goes up, down, up, down. Not really looking that glamorous at the moment, even though I do have some. Okay. Here's your top, and she's dropping. Sorry, dude. AAOI, what the hell is that? AAOI. Ooh, is that right? Top, bottom, was, is, up, down, up. Let's zoom into that. What are we looking at? The top, the bottom, 1 day up. All right, and she's at 129 now, definitely going up. Okay. All right, so that's it for tonight. Let's see what other questions we have. I'm just gonna do questions. Been killing it in mid caps. All right, Verdi, what's happening, Verdi? Nice to see you. Derek, Pepsi, maybe. RPD, rest in peace. Yeah. If your covered call credit lowers your basis as the price goes down, and what price do you hold the stock and stop selling? Never, never, ever, ever. Every single week, I write a covered call on every single position that I own. I'm 62. My money's going to come from somewhere, and the federal government's giving me $589 a month. That's it. I put in 5 decades. That's 50 years I put in, and I'm getting $589 a month. That's it. Do you teach too? Yes, I do, Lucky. How long is your course if someone has to learn? Now, my daughter got it in 15 minutes. Seriously. Okay, my daughter, 9 years old, she says, Daddy, can you teach me? Simple. Okay, so never buy something that's not on the list. Okay, so I created the list for her. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and anything on Warren Buffett's. Should I hold on to the $3,500 SpaceX? Okay, dude, I know absolutely nothing about you. Do you know what that means? I cannot give you advice if I know nothing about you. So if your basis is 14, would you sell at 13.50 and lose 50? No. Rule number 2. Never, ever, ever sell at a loss. Think about it. Before you buy anything, you should know what the 52-week high is. You should know what the 52-week low is. You should know where you're jumping in. So if you're oh, we got a caller. Hello? Hello? All right, I can hear you. You got your microphone on. If you want to say something, speak up. Okay, as I was saying, you should always know as much as you possibly can about each company. Okay, so if I'm buying at 14, I will never, ever, ever, ever sell it below 14. Because rule number 1 is pretty simple. Never buy anything you don't want to hold on to long term. Okay, so if you own it at 14, why would you sell it? What's up? What questions you got? You got your microphone on. I can hear you. What do you got? What question you got? All right, if you're not going to speak up, I'm going to turn the mic down because you're all that noise in the background. Hello? All right. He gets on and asks to speak, but doesn't say anything. Weird. All right, so hopefully that makes sense. If I buy it at 14, I'm never, ever, ever going to sell it for less than 14. Because rule number 1 is pretty specific. Never buy anything you don't understand. So if you don't know what the high is, you don't know what the low is, you shouldn't be buying it. If the option chain stops offering, you would hold and collect dividends until the price recovers. Well, yes, but why would the options not be offered anymore? That makes no sense. Okay, I would like to take a look. See, it comes back to the rule number 1. You should know everything there is about the company. Have they ever stopped the options before? Why? And why would you buy it if they did that? There's 11,497 different companies out there. Why buy one that you're uncertain about? That's why rule number 1 is so important. Never buy anything you don't understand or you don't want to hold on to for the rest of your life. And rule number 2 is even easier. If I'm buying it at 14, I'm never, ever, ever going to sell it for less than 14. I mean, I can pick up premiums all week long. I mean, every single week, all year long. I can pick up the dividend every 90 days. Well, great. I still refuse to sell it for less than 14. But that's me. You got to figure out what's right for you. Okay? The open orders decrease the further away you get from the money. Yes, that is true. But I always want to have something. All right, so if I buy it at 14 and it drops to 13, well, yeah, I'm still going to sell the 14s. Probably going to be a lot less, not going to be 1%. I get that. If she drops to 5, if I buy it at 14 and she drops to 5, I'm not selling the 5s, I'm not selling the 6s. I'll probably sell the 7s, the 7.5s. I want to bring in something, even if it's a penny or 2 pennies. I want to bring in something every week. I want to be far enough from where the action is, but not close enough where I might be called out. And then I want to set an alert because it's free, it's there, it takes 2 seconds. If I bought it at 14, dropped to 5, I'm going to sell the 7s, and I'm going to put an alert at 690. So it hits 690, oh, hey, wake up, do something, that type deal. But every week I want something coming in. Wouldn't the 750s be called at a larger loss? Only if you're not paying attention. Think about it. If you're watching your account every day, okay, which you should be watching your account. It's like if you have a dog or a cat. You feed it, you water it, you take it out, and you clean up after it every single day. Well, why don't you do that with your own money? If I'm looking at the stock that I bought at 14 and it drops to 5, well, I want to know why, number 1. Number 2, I want to look at it every day. Where did she open up today? Where is it? What did I buy? What did I sell? Where is it? Where's it going? What should I do? I ask that question every single day. It's kind of like having teeth. You brush them and you take care of them every day. If you don't, they're going to fall out. Same thing. Pay attention to your money because you need it in order to live comfortably when you get old. RCL, Dylan. All right, let's keep on going. So hopefully that made some sense. Did it? Yes? No? Yes? No? Maybe? I don't know. Like it might drop because of a Trump tweet or a war or something. Yeah, absolutely. Well, then stay away from companies that could be swayed that easily. Think about it. Because I remember when old Trumpy boy said tariffs, 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 everything dropped, and I got 4 margin calls. I have 7 accounts, so I got 4 margin calls. So yeah, so nowadays I have to keep that in mind. So now my trading when old Trumpy boy's in office is a little bit different when JoJo was in office or when Obama was in office or when the Bush boys were in office. Things are different. So you have to just get accustomed to what's happening in the atmosphere. Kind of makes sense. Thank you. Like how Ford jumped up for a few months ago. Yeah. And then it came back down again. Same thing. But would I sell it at a loss? No, I wouldn't. Mo Money! What's happening up? We'll take a look at tomorrow. NVDY, we'll take a look at it tomorrow. Intel, tomorrow. Just some human. Can you explain covered calls like I'm a 5-year-old? But seriously. 5-year-old, let me think. Hold on. I had 4 kids and a bunch of nieces and nephews, so I think I might be able to do this as a 5-year-old. 5-year-old, shit. It was easy explaining to a 9-year-old because there's a huge difference between a 5-year-old and a 9-year-old. Because at 9 years old, my daughter says, hey, Daddy, can you teach me? So she understood the concepts. But my 5-year-old grandson, he doesn't understand squat. So it's a little bit challenging to explain it as if you were a 5-year-old. All right. All right, here's an idea. I'm going to need a prop. This is my prop if you're a 5-year-old. Okay, as a 5-year-old, this is yours. What I'm going to do is I'm going to give you $1 for let me have this for 1 week, and on Friday I'll come and give it back to you. But if I don't give it back to you, I will buy you another one, bigger, better. And Friday, I come back and I give it to you, you get to have that money that I gave you, and you get to get your thing back. But if I want to keep it, I'm going to replace it with some money or something better. That makes sense? How about this? Because I'm assuming you're an adult. Because as an adult, I have settings on all that. I'm on 13 different channels. Each one gives me the ability to create a setting. So hypothetically speaking, you can't be on here unless you're 18. So if you're 18, let me see if I can explain it this way. All right, let's say hypothetically speaking, you got an old Volkswagen Bug in the backyard. Old Bug in the backyard. Volkswagen Beetle, VW, punch buggy, whatever you want to call it. So we push it out to the front of the yard. Slap a for sale sign on it, $5,000. It's yours, you own it, you can do whatever you want with it. It's yours. So you take the car, you push it in the front yard. Then you put a for sale sign at $5,000. So Tom, the guy, I'm getting you from London. I want to bless. Okay, thank you, Papa Rich. Don't be doing that. Sorry, I have to take care of this. I dislike it when people do this. All right. Back to my car scenario. So if I own the car, I take it and push it in the front yard and put a $5,000 for sale sign on it. Somebody comes knock on the door. Hello, I like your car. Let me give you a couple of $100. Hold the car for me until Friday, 4 p.m. If I show up on Friday, I will give you the $5,000 for the car. But take this money, non-refundable deposit, to hold it for me, which means you cannot sell that car to anyone else until after 4 p.m. on Friday. If I don't show up and give you the $5,000 for the car, you have the right to sell it to someone else. Okay, so let's say I don't show up on Friday, and then on Saturday, hey, I see you got a car for sale. Let me give you a couple $100. Save it for me until Friday. Cash non-refundable deposit, not to be taken off the purchase price of $5,000. Again, so you got a couple $100 from the first guy. Second guy comes in, he gives you a couple $100. Now Friday comes, you either buys the car or he doesn't. If he buys the car, great, he'll give you the $5,000. But the money you collected from the first guy, the money you collect from the second guy, cash, non-refundable cash deposit. Just hold it for me. That's it. So I can get a deposit from everybody every single week until someone shows up and pays the full $5,000 for the car. So as long as you own the stock, it is yours to do it as you please. The option is the non-refundable deposit that somebody pays just for you to hold it until Friday. When Friday comes, 3:59 p.m., that is your absolute last opportunity to buy that car from me at the $5,000 agreed price. Same thing with the stock. If I buy the stock at $125 and I sell someone the rights to buy it from me at $125, wait, that's not $125. Current price, $125. If I sell someone the rights to buy it from me at $125, I'm going to collect $6.50 per share, which is $650 for one contract. So I own it at 125. You want to buy it from me at 125 for me to hold it for you until Friday. You're going to pay me $6.50 per share. Okay? So if I own it, the price I own it at, and then I agree to sell it to you at a certain price, called the strike price, by a certain date, called the expiration date. And a weekly option is just the week of the month. 17 July, this Friday. 24 July, next Friday. 31 July, 3 Fridays away. 7 August, 4 Fridays away. 14 August, 5 Fridays away, so on and so forth. So every single Monday morning, I take a look, I dust off that Volkswagen, make sure that sign's looking nice and pretty, okay? $5,000, you can own this car. So if somebody walks up, hey, I like that car, let me give you a few $100, hold it for me until Friday. The price, $5,000, strike price. The expiration date, this Friday, 17 July. That makes sense? All right, let's keep on going. Tell me, who do you love? Who, baby, who do you love? Okay, Vertferk. Really? Vertferk? Vert de Ferk. Oh, Vert de Ferk. I like that. It depends on how you say it. Vert de Ferk. It sounds like the Swedish Chef. Remember the Swedish Chef? Vert de Ferk. I'm going to have to remember that one. I'm going to put that on a t-shirt. Vert de Ferk. V-E-R-T. Hope you don't mind me taking that, do you? Vert de Ferk. That's funny. All right. It's all in the delivery. Vert de Ferk. Can I have cool beans, Bronson? No. Okay. You got a question? Thank you for your question. Thanks for your interaction, but no. TSLL, UPS is in the toilet. Okay, got it. We'll take a look at that one tomorrow, Gary. Can I look up QDTE tomorrow? Oh, Intuit tomorrow. Yep. Kobe, we looked at that. Mr. TV. Papa Rich, comment blocked. Yeah, thank you. Thank you there, Den. Francis, D, Scott, now is a no. Cash secured puts versus covered calls. Sam, they're basically the exact same thing. Think about it. Okay, a cash secured put, you're putting up a big chunk of money, and it's being held as long as that contract is alive. Same thing with a covered call. You're putting up a big chunk of money until that covered call is exercised. Basically the same thing. You're still putting up money to get a return on your money. But yeah, I understand the benefits of cash secured puts. The ROI is sometimes different, sometimes the same. Winston, tomorrow. African Prince, tomorrow. Jenny Lane. Jenny Lane is in my heart and in my mind. Cincinnati. Coles, we'll take a look at it tomorrow. NBiz, tomorrow. What's your spin on Clorox? Okay, Charles, Clorox is a monthly optionable stock. It's a 100-year-old company, and it has 5 decades of increased profits. So I love the company, just not for this strategy. I would do it in a different strategy, but not this one. Andy Barr, what's happening, Andy? Good evening to you, too. All right. Jeff, SOXS and XOXL. Tomorrow sounds like a good time to do that. I'm just looking for questions. What do you guys have for questions? Is NVDY similar to Misty? Hell yeah. Piece of crap, in my humble opinion. Rev, I mean, to be fair, MSTR has been fried and they switched to weeklies. Their whole thing went under. Revy Detail. Let's take a look at MSTR, just for the fun of it. MSTR. I like numbers. Song's going to be stuck in my head. Which one? Seriously, which one? I sing a lot. I love singing because it means I'm happy. I'm a happy guy. All right. Strategy Inc. MSTR. Oh my goodness. Okay, Revy Detail. There are no dividends in this time period. So how do we know if this company's profitable or not? Let's go to the summary. What is the summary going to tell me about MSTR? All right, who came up with this one? All right, Revy Detail. Revy Detail, okay, I'm a numbers guy, strictly numbers guy. I honestly don't care about feelings. I don't care about opinions. I don't care about anything but the numbers. Just the facts, ma'am. Remember that show back in the 60s? Just the facts, ma'am. Just the facts, okay? Earnings per share, negative $39 per share. Negative $39 per share. Why the hell are you putting money into something that has negative earnings? That means they're losing money. No, thank you. Song's gonna be stuck in your head now. Alrighty then. Scott, no, I don't do monthly options, just not worth it. SPCE, with a 40% short float, this could blow. Okay, explain to me SPCE. Hold on. SPCE. Let's check on something for a second. JEPQ isn't a company. Oh, don't even start. Okay, don't even start with that bullshit. I know exactly what it is. All right, Bill, SPCE, negative numbers. Now, don't get me wrong. Anything and everything has potential. It really does. But if I'm putting my money into something, I want to put my money into something that is profitable. Negative earnings means they're losing money. It's plain and simple. Negative earnings, they're losing money. That's it. So Fresh Prince. I'm going to agree with you 100%. I really honestly am. JEPQ is not a company. Here, I don't give a rat's ass. I really don't. Okay? Numbers are numbers, and you can't tell me anything otherwise. What is it? JEPQ? JEPQ. Okay? Hold on. It's going to pop up. Okay. JP Morgan, NASDAQ Equity Premium electronically traded fund. Electronically traded fund. And don't give me that equity bullshit or exchange traded fund. It's traded on a computer. If it wasn't for electricity, the computer wouldn't work. It's a computer-driven company. And it is a company. Okay? They got a high, they got a low. They get net asset value. They got premiums. They have returns. They have a yield. They have, do they even have, yes, they have dividends, a 52-week high, 52-week low, average volume. It has everything a company has. It even has one person who runs the whole thing. The one person who hits those little buttons, enters what you're buying, what you're selling. It's run like a company. It is. And there's always trickles down. Always money coming in, always money going out. If the company is profitable, if the ETF, whatever you want to call it, is profitable, they will share the profits. Historical data right there. Come on, you mother puss. Historical data right there. Okay? Hold on. There it is right there. Historical data, dividends only. Now, I don't care if it is a company, if it is an ETF, if it's an index. I don't care what the hell it is. If it's showing a profit, it's going to share the profits with the investors. If I buy shares in JEPQ and they are profitable, they will give me money. If they are more profitable, they will give me more money. If they are less profitable, they will give me less money. I don't care what you want to call it. If it looks like a duck, quacks like a duck, and waddles like a duck, it's a duck. Okay, if there's one person in charge, which there always is, if they make a profit and they share their profits and they have dividends and they increase and decrease, it's the same thing as a freaking company. Let's not get bogged down by minor details. But let's look at the facts, because I love facts. I do, okay? Let's look at all of them, not just the dividends. Look at all the dividends. Okay, JEPQ. 37, 34. 37 to 34 is a 10% decrease. Is it or is it not? Let's get over the fact it's a company, it's not a company, ETF, whatever that bullshit is. If she goes from 37 to 34, that is a 3-cent drop on a $30 stock, on a 30-cent dividend. It is a 10% decrease. Okay? Down, up, down. Went from 54 to 38. 54 to 38. So 54 to 38 is 16 bucks. 16 bucks, no, 16 on a 54 would be 15. 15%. Okay? 10% drop, 15% drop. 68 to 54, that is 9% drop. Dude, it's not consistently profitable. It is what it is. The numbers, lower, higher, lower, higher, lower, higher. Hold on. Oh, wait, let's do it this way. All right. Lower, higher, lower, 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 higher. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. We stopped at 2023, April 2023, right there. Okay. Whoops, I don't want that. I want this right there. All right. Higher, lower. Higher, lower. Higher, lower. Higher, lower, higher, 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. We stopped off at May 2024. May 2024. Okay. Higher, lower, higher, lower, lower, higher, lower, higher, 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Hold on, not done yet. That was May 2025. May 2025. Higher, lower, lower, higher, lower, higher, lower. 1, 2, 3, 4, 5. Okay. June 2026. 1, 2, 3, 4, 5. Hold on. June 2026. Where are we now? July. Higher. Okay. So, Fresh Prince of Philadelphia. 5, 10, 15, 20. This thing has paid dividends for 4 years. That's it. 4 years. The very first dividend was 4 years ago. In the 4 years, it has gone down 20 months. 4 years. That's 48 months. 48 months in 4 years. It's gone down 20 times. And you think it's a good investment? Seriously. Hold that thought. Microsoft. Maximum amount is increasing its dividends, its profits, for over 25 years. 25 years. Are you ready? Watch. 2006. It goes back further. I don't want to go to 2006 because that's 20 years. All right. 8, 9, 10, 11. Whoops. Try it again. 8, 8, 9, 10, 11, 13, 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75, 83, 91. 25 years. Higher, 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 higher profits. The dividend is the profit the company shares with the investors. As an investor, whether it's a company, whether it's an index, whether it's an ETF, whether it's, what is that bullshit called? Money market, not a money market fund, mutual fund. If the entity is profitable, it shares the profits. JEPQ goes down the same amount of times as it goes up. No, double hell no. No, just no. Why would I want to buy anything that's not consistently profitable? There's over 350 companies. 350 companies that are consistently profitable. Why would I want to buy? You know what? I'm done. That's it. Rules are rules for a reason. I never want to buy anything that's not consistently profitable. Bread and butter, what's happening? Nice of you to show up, dude. All right, we're going to need some mood music to call it a day.
It takes 90 seconds for this NASA-engineered AC cool down your room. It's smaller than a toaster, cools any room in 90 seconds, and uses just a fraction of the energy of a regular...
There we go.
Fixing the world while the rest of us sleep. Your heart said I'm giving, no matter the strain. Building your legacy through love and rain. You know that fire in your soul. It kind of lets
See you later, dude. Let's know what the hell were you thinking? Your life is young. I'm doing great. Thank you. Let's
Retired, you say, with a wink and a grin, but the podcast is rolling, pulling us in. Your comforted love, if your kiss is yours.